Hey, Dan Fatica with DGF Asset Management. Just wanted to answer a frequently asked question, which I'm regularly getting, comes up in conversation with borrowers. Can I refinance faster using bridging finance? So there are certain, very broad conversations, so we are going to deep dive into the detail there a little. Can I refinance faster using bridging? Yes, you can, is the short answer. But there are certain challenges and difficulties. You can refinance much faster than using a buy-to-let mortgage. So a buy-to-let mortgage, you're typically tied in for 2 years. That's £20,000 to £30,000 deposit, £20,000 to £30,000 renovation. You've got maybe £40,000 to £60,000 tied up in that project, and to release that money earlier than the 2-year period, you're having to pay a 3% early redemption charge, as well as the entry fees, the exit fees, the broker fees, and solicitors' fees all along the way. But most importantly, the difficulty there, which I think makes bridging such a powerful tool, is that a mortgage takes something like 12 weeks to arrange if you're quick in the current market. So you've got 3 months at the front to buy, you've then got an 18-month to 24-month wait, or if you wait until the period ends, or you've got a 3 month to buy, a 6-month renovation and letting period, and then another 3 months to come off the buy-to-let product and pay the penalty fees. Bridging finance is quite competitive because you can buy in a month, you can refurbish a tenant in 6 months and refinance in 3 months at the end. So your 12 to 18 month cycle of a property can be brought down drastically across the whole, but specifically in higher value buy-to-lets or multi-let HMOE sort of properties, you're able to turn those projects around even quicker. So the challenge around refinancing early on a bridge with certain types of properties found in the north, Scotland and South Wales, if the value of that property is under £100,000, you're going to struggle to refinance that in less than 6 months. The 6-month ownership rule was brought in 2012-ish. It's guidance, so it's not a hard and fast law. It's guidance to brokers and lenders to help sort of take the heat out of the market. In 2008, you were finding people buy a property on the Monday, refinance it on the Tuesday. That meant that values really were escalating and getting away from ourselves. And eventually the sentiment was this can't go on forever, and people stopped paying. So dropped off the cliff. So that 6-month ownership rule is certainly in place for lower value buy-to-lets and those beginning. As you get up you progress through the property pyramid, quote unquote, and you're moving into more sophisticated projects. That's 3 to 5 bed HMOs, 7+ bed HMOs, more commercial finance. Definitely that 6-month ownership rule does not apply. The 3 to 5 bed HMO threshold's a little bit unique in that you can sometimes still get quite low value buy-to-lets. I'm thinking maybe social housing HMOs in the northeast and the northwest. But across the whole, we're getting a lot of deal flow, certainly in the Midlands from bridging, where we're buying a property for around 100 to 130. It's being refit with a couple of bathrooms, 20 to 30,000 pounds being spent, and the value at the end is 170,000 pounds. We are seeing clients come on and off a bridging loan within 5 months. It's not the norm. They are sophisticated clients. They're on maybe their 6th or 7th bridge with us as within their own portfolio, plus others that they've bought without bridging finance. So they are the more sophisticated. But when you are that bit more advanced, you're really able to condense the time using bridging finance, which means that you're able to scale and grow your portfolio that much quicker. It's really going to slow you down if you've got money tied up into a buy-to-let, £40,000, £50,000 for a 2-year period. Okay, you can pay the penalty fees and come away earlier, but still you're going to be buying with buy-to-let mortgage, refitting for 6 months, another 3 months at the end for the refinance. It's really going to slow you down, whereas if you can condense that time to maybe a 6-month cycle per project, you're able to roll that money that much faster, and ultimately it's all about turning money profitably in these buy-to-let projects. Other considerations that I thought about worth jotting down. So buy-to-let bridging finance, just a quick summary. Under 100k, you're able to get on and off after 6 months. advice here to expedite the process of that refinance after buying with a bridge. Make sure you're in touch with your mortgage broker well before the end of the project and tenanting. You want a surveyor booked for as close to that 6-month day as possible. So if we're buying on the 1st of January, we want someone in there on the 1st of July to be viewing, or as close to as possible, so that they can reduce their valuation, and hopefully we can get a mortgage offer as soon as, because valuation to mortgage offer is not a 1-week process as it's maybe advertised. It can be 4, 5, 6 weeks, and you're going to need to provide this, and you're going to need to re-provide bank statements, etc., etc. So it can be a real uphill battle at the moment. I'm certainly having challenges with Kensington at the moment. They're doing a 75% buy-to-let refinance on a couple of our properties in South Wales. It's just taking a hell of a long time. So if you can condense time and speed things up by booking ahead before the refurb maybe finishes or catches up, it really depends on the valuation of your product. So for these 5-6 bed HMOs in the Midlands that may be worth 150, 170, 180, I would have that valuation booked for before the 6-month rule, because lenders would take a view on that. If you're refinancing 65k 2-bed flat in the back streets of Glasgow, you're probably going to have to wait to the 6 months. That means you're coming off at 9 months, but again, you are still turning your money inside a year. And I think if that's the minimum, that would be a great target to shoot for, getting into and out of a project inside 12 months. Hopefully having another to roll funds into is a great way to begin scaling your portfolio, and a really powerful tool to help you progress up that pyramid and into more sophisticated projects that much quicker. Hope that's helpful, guys. Any questions, concerns or challenges around bridging finance, please don't hesitate to give me a call or just drop me a message. I'd love to chat and talk things through.